Hey guys, Mike here with Robert Quants. It is Thursday, April 20th, and I'm back. I'm back with a really quick market update because, curiously, Bitcoin seems to be following exactly the script we've outlined for it over a month ago, right? Do you remember these lines? I drew them the beginning of March, early March, I drew these, or mid-March, okay, let's be honest, mid-March. So a little bit over a month ago. And so it follows exactly the script so far. Now, again, do I have a crystal ball? No, I don't. Absolutely not. Just have seen this kind of price action over and over again. It's quite natural because if you follow along here, right, how long did it take to go from 20,000 effectively to like explode to 28,000? Wow, let's count it, right? So it took 1, 2, 3, 4, 5, 6, 7, 8, where are we? 27,300. Okay, so let's say to 27,000, from 20,000, it took like a week. And then the remaining 3,000, it took like almost 2 weeks, or something like that, like 2 weeks, maybe a little bit over, actually over 2 weeks. See that? And of course, it was slowing down. Why was it slow down? Because all the other monkeys looking at the market, looking at this as well, and they're expecting resistance here. See that? Right here. See, there's context. Context is important. Context is important. And we'll talk about that in a second, actually. So people are taking profits because they're thinking, yeah, it's come a long way, you know. I mean, some people maybe bought down here. They doubled their money. They're saying, you know, it is due for a correction. So let's take some profits. And another monkey's looking at that as well and saying, oh, well, people are taking profits. Maybe I should take profits too. And so, right, the circle continues. The cycle continues. And before we know it, we're down here at maybe 26,000, 27,000. I think 27,000 is definitely in the cards. It's definitely retracing. Now you think it's a bad thing, but it's not a bad thing at all. Because the worst thing you can ever see is just continuous higher. Because if there's so much volatility to go on in the early stages, right, go up, it'll get slapped down fairly hard and fairly easy. The more rest stops we have on the way, the more context there will be later. So be patient, right? Give it time. And even if it comes down here, great buying opportunity. Because these retests, they have a purpose. They establish more context. They re-establish the previous clusters, you know, price clusters right here, 25K plus minus. They give them more gravitas, more weight, and this way the tape can continue higher, having retested it, and even if there's a sell-off, a sudden sell-off, we have context. So that's what we want to see, right? It's good. This is good stuff, and if nothing else, it gives some of you stragglers an opportunity to buy, which, you know, I think in this range right here is probably, you know, has a higher probability than when it was down here. The second best would have been here. Breakout trades are usually pretty good. See this? Because when it takes off, a lot of people don't expect that. And all of a sudden, boom, right? It's what happens here in spots like this, just from price action. And you see, I don't use many indicators. There's almost any indicators at all. Because I always just follow the price action. And you look at these candles right here. I know that sounds weird as a quant trader. I have definitely my quantitative gene, right, where I do a lot just quant-related research. But reading price action has value because there's just stuff. I'm telling you, when you code, right, you code this kind of stuff, and you're coding a strategy. How the hell am I going to code all this? I would have to analyze the movement. I would actually have to pull tick charts now, because in order to just kind of see the velocity of certain candles and everything, because the length often is also deceptive, because this could have happened in, like, you know, within 4 or 5 bid asks, you know, bid and asks activities, right? Or it could have happened within you know, within 6 or 7 hours. You don't know. I mean, this could have happened almost instantly, right? Versus maybe taking several hours. So there's a difference to that. And so this brings me to the abstraction of price. If you're looking at a chart, and follow me along here a little bit because it's kind of important. I don't know how many of you guys have ever really thought about this. When you're looking at a chart, you're looking at price abstraction. What is price abstraction? Well, if I really wanted to properly represent price visually, graphically, then I would have to show you a tick chart. And that's just a huge amount of data. We overwhelm. Our senses cannot make any sense out of it, right? It would just be this cloud of information, and it would be completely overwhelmed. So what do? Well, we invent these candles, right? Japanese did, you know, smart people. And, you know, candle charts, you know, open, you know, high, low, high and low. I'm sorry. Open, close, low and high, right? And that's what that makes sense to us, but it doesn't give us the whole story, right? So it just gives us an abstraction. We look in all that and we're trying to make sense out of it. And it gives us some idea, but not the whole story. So even when I draw a line, I always hate it when they just give you these line tools, right? And then the line is like, let me show you, for instance, total, right? Because I have a line total that I drew a long time ago. And you see right here, this is the line. That's as thick as I could make it, but if I could, I would use a crayon, right? Thick crayon on draw here, because that visually represents it better, because it's never accurate, right? If it really exactly gets reversed right here, that was just sheer luck. It could have happened here, or maybe down here, before it actually hit. It's like a magnet, right? We have these magnet zones. And these happen because other monkeys like us looking at it, so and say, well, things are gonna happen here, right? This was the easy ride. It comes to complicated ride, and now we're basically, we are correcting. And by the way, total is everything, the entire crypto market. Right? Total 2 is crypto minus Bitcoin. And that gives you a pretty good idea what the rest of the market is doing. If you're looking at total 2, that's Ethereum plus. I don't think that's total 3. Is the total 3? Total 3? Nope, there's not. Just total 2. I think that includes that includes Ethereum. Might as well. Okay, so we kind of see what's going on. What's interesting talking about Ethereum is that Ethereum seems to be holding on a little bit stronger. We had this one big swat down, but right now it's actually, I think, a little bit stronger than Bitcoin right now. So that's actually kind of encouraging, because this is what we want to see. We don't want Ethereum really to lag Bitcoin at this current stage, right? We want Ethereum probably to stay strong. Okay, so what do? I told you already yesterday, but in case you missed it, I just kind of follow the line. I think that's probably, as luck would have it, is a good representation of where probably price is going to hop next. If it reverses from here, just know, and I haven't drawn this, like right here, if it pops above, let's say 30,500, we're good to go, right? Because then it's probably going to take off, because it definitely recognizes this inflection point, and especially if once it pops over 30,000, then it's really rocket time, right? Then we're like gonna take off, and we probably see us at around 40,000 fairly post haste. Now, what's the bearish scenario? Well, what's the bearish scenario? The bearish scenario is that we probably come down here and somehow, for whatever reason, fail the retest. I mean, not to be a Pollyanna, but I think the probabilities of that happening in this current market phase, what's going with the dollar, what's going internationally with the market and everything, I think these odds are fairly low. I would never rule them out altogether, but at this point, it's not a probability that I think has, is pretty high and has a high ranking. Let's put it this way. I think we're looking at a retracement situation first, followed by a pop higher. How quickly that will happen, we don't know. I mean, it might spend time down here, right? You might actually get time. It might drive us crazy. It might even give us a little bit of a fake out where it pops below briefly and comes back. We might see this as well. Nobody has a crystal ball. But anyway, this is where we are right now. It's following the script. That's the bottom line. Follow along. It is a good thing. It's nothing negative. That's what the tape's supposed to do. The more context we get, the better once we continue higher, because if there's ever a retracement, we have context. The worst thing it could do is just continue up right in a straight line, because that's usually where you see acceleration, and it can happen the other way. For instance, see look at this hole right here. Let me explain this right here. See that? Let me zoom out. Okay, so there's a little bit of context here, but it's quite old. So the older it gets, the more validity it loses. And here, that's just air, right? So once we're above here, the odds are that it continues higher. They're fairly high, right? I know there's always, when you scroll back long enough, you see some context here as well, right? Some resistance. And we'll see what happens. But most recently, it was able to overcome that very quickly. See that? And here as well, right? So that's why this journey here was fairly easy, right? Let me zoom back in. See that from here to here? It came back. There was nothing really holding it back, right? So that's kind of how this works. No indicators, right? No hands, ma'am. And it flows it pretty much flows as expected. It's not really rocket science here. Okay? That's all I got for now. Let's just keep watching, see what happens. I'll keep you on point, and till next time. Cheers.